Hello, this is Richard Pears of Finextra TV, and I'm joined today by Sara Anzinger from Measurabl, who's a Senior VP of Capital Markets. Hello, good to see you today.
Thank you. Hello. Thank you for having me.
Well, delighted that you could join us. We had a chat about a week or so ago, and I was excited about what you're doing there, so I thought it'd be great to let everybody else know. Tell us a little bit about you, first of all, how you got into this business, and then we'll get into who Measurabl are.
Sure. Yes. I'll try to make a long story short. Most of my career has been spent in commercial real estate, banking and finance, loan underwriting, origination, and then after the last financial crisis, working out non-performing loans. I also spent some time rating structured finance transactions in the CMBS market with one of the big three credit ratings agencies. And it was in graduate school, actually, at the University of Amsterdam that I took a sustainable finance course and became very interested as I was reading more of the academic literature on sustainability and seeing that it could be a real driver of outperformance in investment. And I thought at the time, oh, this is really interesting. I wonder what the intersection might be with what I know, which is, real estate lending and credit, and met up with GRESB at the time, which was assessing the sustainability performance of REITs and funds in Amsterdam, and helped to lead the build out of their debt and fixed income side of the business. So focused on green bonds and how lenders could incorporate ESG in due diligence. And that really led to my joining Fitch Ratings, helping to establish their sustainable finance group and doing work to really more systematically assess and communicate to investors the impacts that ESG were having on fundamental credit analysis and the ratings we were assigning across all of the entities that we rated. And it was throughout all of that period, I guess, that I started to see that the importance of ESG data in furthering sustainable finance and how technology was really the way forward in solutioning the problem of lack of data, credible data, comparable data. And so I was really very keen to join a technology company, which was sort of the next frontier. I hadn't had that experience. And so Measurabl was a really good fit in that I was excited about the work they were doing in the ESG space, in the real estate space as well, and connecting those dots between technology and sustainable finance.
Wonderful. I mean, that not only is that an interesting background, it's almost kind of an encapsulation of this industry journey that's been going on, isn't it, really? And brings us right up to the moment, which is where I think, we're seeing a lot more correspondence going on around alternative data sets and how we bring that into the world of financial reporting. So thanks for that. Now tell us a bit more about Measurabl. Great name in the context of what you've just said. What's your niche, what's your focus, and what's the sort of, the problem? I think you've given us a teaser, but what's the problem that you're solving?
Sure. So Measurabl is a venture capital-backed software company based in San Diego, California. We offer an ESG data management system and have done that serving direct investors in real estate owners for a number of years. We currently have about 45,000 buildings on the platform today, valued at about $2 trillion, and that's across 75 countries. So it is a global platform. And the problem it initially intended to solve was really seen by our CEO and founder, Matt Ellis, who was head of sustainability at CBRE at the time, and going through this very cumbersome process of trying to collect data, asset level ESG data, and finding it frustrating and using Excel spreadsheets and trying to manage it without lots of human error. So he was going through that problem himself, and to his credit, thought there must be a better way. Is there a way that technology can solve for this? And so that was really the inception of Measurabl, in trying to create a solution that would automate data capture, provide analytics, and ultimately streamline the reporting process to frameworks like GRESB, for example, or CDP. I think increasingly, over the last few years, we see a similar problem within the capital market space, let's say, as investors and lenders are also very much wanting this type of data. And yet, gathering it. They're finding that they need new solutions to help automate that data gathering, to be able to ensure data quality, verifying the impacts that are supposedly the outcomes, right, of sustainable finance, and ultimately to help them with their own disclosures. So this is the problem that we're shifting to today. And Measurabl has always said that it's kind of a meter to market solution. So we actually go all the way down to pulling in meter level data at a building. And the market, I think, is increasingly not just the transaction market of buying and selling properties, but really the capital markets and access to capital.
Yeah. So give us, that's a really nice answer in terms of giving us the fit that you're into. Now, give us a sense, if you are, of, even if it's an anonymized customer, of somebody that's using your solution now, as you say, from the sort of the meter to the market. I love those analogies, and how it's working for them in terms of both what they were like before, maybe, or certainly what they're doing with you now.
Sure. So, I think if we follow this link, right, between ESG data management and capital markets, we see something pretty interesting. And that is that currently 11, I look as if I'm doubting that. No, I just counted them. 11 Measurabl users are actually issuers of sustainable debt, either bonds or loans to date. And these are coming from property companies like CBRE Global Investors, Prologis, Boston Properties, Brookfield, Fraser's Property. And this is debt that totals over, I think, $10.5 billion today. So these are players that have been quite active in the sustainable debt market to date. And clearly, as we've spoken more and more with banks in this space, what they've indicated to us, debt capital markets groups, is that it's data aggregation that proves to be the greatest impediment to their real estate corporate clients issuing this type of sustainable debt. So clearly having a dedicated environmental data management system, I think better positions companies that want to tap into this type of capital. That said, I think that's the sort of investment banking world, and the same types of functionalities that are serving these types of issuers can serve well the banks that are trying to underwrite these loans and ensure that there's adequate technology and data backing those issues. Right. If we look at the commercial banking space, what you also see is this crossover and application of the tool for real estate lending, not only at the time of due diligence, and you could say the same with insurance as that space is developing as well, but also throughout the life of the loan. So there are use cases across segments of banks, of commercial banks, in lending at time of due diligence, but also ongoing servicing, risk management, and even corporate facilities. So as banks are wanting to green their own operations and buildings, Measurabl is a tool that works well for corporate occupiers also in the financial institution space.
Right. So the way you get the data, you've touched on it, but you're basically, we often talk about corporate reporting, which is filling in of forms, and we talk about maybe at the other end, satellites and sensors, but you're actually going into the meters, the water, the electricity, the gas, etc. meters. Tell us a bit more on how you source your data, and then how do you evidence it to these cap market firms, etc. that you're talking about, so they can see, if you will, the provenance of the data.
Yeah, I mean, I think that's key, especially in the capital market space or fintech space, right? Because it's so important, the quality of that data, where it comes from, the chain of custody. And so rather than necessarily relying on self-reported, company-reported data, this is actual data that is indeed coming directly from the utility provider. So there are a number of ways to pull data into the Measurabl system, but what 75 to 80% of our clients do is use a proprietary tool of ours called Utility Sync, which will pull that data directly from the utility providers, whether it's a water meter, an electricity meter, fuel district. And in doing that, we use AI and machine learning to understand the frequency of how regularly that data is billed, essentially. And you can set it up once and it will automate. So going forward, it's pulled in on a regular basis and always refreshed in the system, and can go back in history as well and pull as much data as the utility provider has on hand. So knowing where it's coming from and also being able to have a digitized bill that backs that up in the system is really what I would say is a more auditable form of data, and so key in terms of verifying impact. And so there are all kinds of tools as well, analytics within the platform that then allows for target tracking, which I'm happy to show you.
Sara, you tell us a little bit more about how you're using AI and machine learning in the solution.
So we apply AI and machine learning a few different ways. One is with our utility sync proprietary tool. So in pulling data directly from the utility providers, we use machine learning algorithms on the back end to recognize the frequency with which that data is available so that we can pull it in at regular intervals, whether that's monthly or quarterly, and ensure that that's automated on an ongoing basis. The other way is for enhancing data quality. And so we check for outliers and anomalies in the data that's being pulled in based on our data lake of 45,000 buildings to see if by property type or size, a building is performing in line with what you would think it should. And also something we call data integrity monitoring, where we actually look at gaps and overlaps in the meter level data that's being pulled into the system. We're able to identify and flag those gaps and overlaps for remediation or correction. And in doing this, it's really our aspiration to evolve ESG data toward investment grade quality. So these data quality measures where we use AI and machine learning on the back end are really key in furthering that.
I know you said to me, we can have a look at the system, and I'm all for having a look at the demo. So please pop that up on the screen for us. And because I think it sort of helps people to take some of these wordy abstract ideas and make it real. So I've got it in front of me now. I can see your Acme asset management system.
Yes.
Tell me what I'm looking at here.
Yeah, sure. So it is a cloud-based software solution. So from our website, you would just log in and land here on the dashboard for the master account. So basically, all of the properties that you would load onto the platform would get rolled up here at the portfolio level. This is dummy data. It's called Acme Asset Management Portfolio. You see about 80 million square feet here. Everything within Measurabl is able to be adjusted. So currency, units of measurement, can all be adjusted depending on what view or what lens you want to use. It's also very flexible in terms of the dashboard itself. You can design it however you choose. Mm-hmm. And what you see on the dashboard is a number of data points of significance. So you would see your scope 1 and scope 2 emissions relative, again, to the overall portfolio. You would see property type allocation across the portfolio. And you would see a suite of analytics on what we would call core ESG metrics for real estate. So energy, broken down into electric fuel district, as well as water, waste. And you would see that both for usage and for spend, rolling on a 24-month basis. We also have our own peer benchmark, which would show how the portfolio is performing relative to all others within the Measurabl platform on carbon, water, district, fuel, and electric. And you can see this is in the 53rd percentile. What's also nice about this setup is that you can subdivide or subgroup as many different collections of assets as you like. So for a bank, for example, this might be your master account, but you might want to segment that into your commercial real estate loan book, perhaps by geography. Increasingly, as banks issue their own green bonds, there's the need to then tie use of proceeds with what are called eligible green projects, which for a bank would typically be green loans or mortgages. So you could set up, eligible green projects and view it in that way. And there's also an unlimited number of users that you could assign to the platform. So if you're a property owner, that would mean you could have your whole asset management team on board, as well as assigning particular buildings to to consultants or property managers. And for a bank, similarly, you could have the entire real estate lending team on here, as well as folks in risk management or servicing, so that you're all referencing the same sort of true source of data. One thing I would...
So you can also do your climate risk as well, can't you? You've got third-party data sets that you can pull into the system so that you can then look at the asset versus the physical risk. Here we go. Yeah.
You can, and I think it's important to highlight. So from a lender or a bank's perspective, with just the property address being onboarded onto the platform, you would get 3 immediate data points or value propositions. One is physical climate risk data, and we've partnered with 427, a Moody's affiliate, for this data. But what you see is a nice dashboard where you see the location of all your various assets. You can see at high level where your risks are across that portfolio, top and bottom performers in terms of risk averaged across these 6 physical climate risk indicators. And you can do a lot of filtering. So let's say you just want to see what's called labeled red flag risk, which would be those in the 95th percentile. You can see that earthquakes, heat stress, and water stress are kind of your most significant exposures here. Maybe you just want to see office properties, and you can view it in that way, or you could also filter it by risk category, and then you can drill down to the site level. So maybe you're just interested in earthquakes, and you can see that you've got red flag risk here for these properties. You could drill down to the asset level and get an even more granular view. And each of these will actually show the sub-indicators that roll up into that overall score that's been assigned of 39 for heat stress. So physical climate risk data is something you would see immediately straight away with a property address.
Yeah.
And what I like about integrating this in with the rest of the platform is that you're getting a sense of what is the environment's impact on the asset, as well as what's the asset's impact on the environment. And increasingly, this is important with TCFD reporting as we look at things through the lens of transition and physical risks. The 2 other data points that you would see right away would be certifications and ordinances. So green building certifications, certainly an important proxy for the environmental performance or operational performance of a building. We have direct integrations with LEED and BREEAM. So if you just wanted to see BREEAM certifications, you could do that. You can filter by the level of the certification, see when it was awarded, if it's assigned to the whole building or just a particular site with build out. And you would also see ordinances, which are regulations related to energy and water performance, carbon performance, and you could filter these as well. So maybe you just want to look at New York City's benchmarking law, and you see you have 3 properties subject to this, when they would need to file, etc.
Great. Good. All right. Well, I think it was just a taster, and it's a nice and comprehensive tool. So let's come back to you. I think this is really important for people to see just briefly. I'm sure you guys can facilitate a full demonstration. But when you were talking through there and you spoke about TCFD, for example, how do the challenge for a lot of people is that on the bank side almost they've got a sort of spreadsheet of questions and answers that they're working with, and here you are with a huge database of data. How do you map back to the capital markets and commercial banking firms that you spoke about the data in a way that they can digest it in the sort of standard reports and formats that they want to consume it? That seems to be a problem for the industry. How do you address it?
Well, in terms of our real estate owning clients, we actually have an integration with GRESB and CDP, where we allow for the data that we're pulling in and automating to be auto-calculated, auto-populated into those report frameworks and then pushed to them. So that makes for quite a seamless process. When it comes to other frameworks like TCFD and SASB, and the whole alphabet soup, the UNPRI has its own reporting. These are typically not reports with their own portals. They're rather frameworks that are giving guidelines on how to report and what to report. And so the raw underlying data is not going to change. And I think the important thing is the data quality, right, on the core material metrics that that are important to real estate. So energy consumption, absolute intensity levels, right, water consumption, carbon emissions, which are auto-calculated in our platform. Those can serve any framework. And I think that's the nice thing about a data management system like this, and that it can be agnostic in the sense that frameworks, I think, will come and go. We're seeing increasingly more convergence, and I think TCFD is clearly very important, and there's growing support for it. And basically, if you look at tracking regulation as well as the building's operational performance in relation to that, as we're all trying to meet Paris Agreement goals, as well as what physical risk exposures are, you kind of get that combination of data that's key in reporting under the TCFD framework.
Fantastic. That's good to sort of see that happening. I think we've talked about it in theory, but it's good to see the practice. And sort of question, I was thinking, just as we're coming to this period of, let's call it transition in the COVID crisis, and there's a lot of stimulus in the market. A lot of it, certainly in the UK, is being directed towards the property market. How do you sort of see your solution? Do you see a market interest pick up now as people are sort of joining the dots of climate, COVID, the fiscal stimulus is, how do you read the market right now, just out of interest?
Yeah, I mean, great question. I think we're all trying to do that. What I have seen is that this has just increased the interest and the priority, right, of addressing these types of risks. Climate change, absolutely, but I think what we're seeing more clearly as a result of COVID is just the systemic risk inherent in and in real estate and in lots of asset classes. But if you think about physical climate risk as a systemic risk to real assets, as well as COVID now, and the impact it's having on reduced occupancy levels and the need to perhaps repurpose properties, retrofit them with new ventilation filtration systems, social distancing design, and touchless entry. These are systemic risks that I think increasingly investors want to be prepared for. Direct investors want to be prepared for, owners, and LPs and asset owners are wanting their investees to be transparent about and communicating how they're addressing these and managing these risks. So I think what I have seen is that a sort of shovel-ready software solution also that doesn't necessarily require hardware solutions or boots on the ground right now is something that has a competitive advantage in that there are limitations to what can be done in person. And so a software solution aligns well with what is possible and what can help further the understanding and management of these kinds of systemic risks.
Just one final question, which I know a lot of what you do with the system obviously aligns to the sort of E quantity of ES and G, but of course a lot of what you were talking about there with social distancing and access and ventilation, etc., is probably sort of S and G, certainly S. Do you see do you sort of envision in terms of future direction that you maybe put more play on that side of things and then dial up the S side of the solution?
Well, the wonderful thing about working for a SaaS company is that it's ever evolving and improving. And so we have a lot of exciting things coming down the pipe on the product roadmap throughout the end of this year. One of those includes a document library, which will help to further the platform as a central repository for governance policies, for all types of social programs. A feature I didn't share with you is projects, which allows for not only LED lighting, retrofits, and more environmentally focused projects to be registered at the asset and portfolio level, but also social projects, tenant engagement, bike parking, and waste removal and recycling projects can all be added into the system. So indeed, I think there are a lot of exciting things that we're going to be doing to further build out that space. And social, the S, the often overlooked or hopped over part of ESG has gotten so much focus, and it's exciting to see how
Mm.
it will, how metrics will develop, and how the dialogue will continue to develop around the social aspect of sustainability.
Fantastic. Well, wonderful. Thanks for spending time with us today, taking us through that so comprehensively, and for showing us the solution. I'm sure you'll come back and keep us updated as things evolve. But Sarah, for now, thank you so much for your time.
Thank you, Richard. It's been my pleasure.